Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Heather Self and Rehana Earle.
Welcome to The Tax Factor, the UK's top tax podcast. I'm Heather Self.
And I'm Rehana Earle. This is my first episode with Heather, and I feel very lucky to be in the hot seat with her this week, as she has been called the Queen of Tax by our very own Neil Insole last week. But I think, however, that is where any reference to last week's episode may end for anyone that did listen to it. Due to Easter, we are slightly earlier than normal so that everyone can enjoy the long bank holiday. So let's hope the sunshine stays out for us all.
Inflation's down, but tariffs are up. The Easter Bunny might want to call their accountant because with the number of VAT cases on chocolate, one wrong hop and they'll be in the tax tribunal. Yes, it's Easter in the UK where even your snacks come with tax complications. But let's hope the Easter Bunny isn't on the phone trying to contact HMRC.
Yeah, Heather, unfortunately, phone lines might be down again with HMRC. On a number of the podcasts that I've done, one of the topics has been the service that taxpayers are receiving and in particular, long call waiting times when trying to get through to the revenue. Well, this time, the revenue have had some suspected fraud and so have temporarily closed the phone lines and web chat services for self-assessment taxpayers who are trying to file repayment requests. But all of their regular self-assessment helplines are open as usual. So if you have questions there, you can. But if you're trying to seek a repayment, then the best way to try and do it now is to go onto the online system.
Talking about repayments, there was an interesting stamp duty case reported in the Times this week. Well, I thought it was interesting anyway. The actual details are quite complicated, but in summary, there were two transactions and stamp duty of about 2 million was paid on both of them. And not surprisingly, the taxpayer thought they ought to get one lot back. And actually, the revenue agreed with him, but they said, oops, sorry, because transaction 2 happened more than 13 months after transaction 1, you're too late to amend your return, and so tough. The taxpayer, not surprisingly, appealed, and the first tier tribunal, so this might be appealed, the first tier tribunal has held that the taxpayer is due a repayment, but he's relying on a more general repayment provision rather than the one which says you have to amend your return within 12 months. There's a separate provision which says that if you have paid too much tax, and broadly it's due to something that wasn't your fault, so something you couldn't have known about at the time, you can still claim the repayment. That applies for other taxes as well. So if you do need a repayment of tax, yes, do it online if you're within 12 months of your normal filing deadline, but there just might be another route to follow as well. But meanwhile, back to fraud, Rehana.
Yep. So we know that the Labour government have been really focused on fraud and trying to crack down on that. And it seems HMRC are definitely putting a little bit more focused effort here. And in fact, have been raiding high street barbers and vape shops and nail bars alongside officers from the National Crime Agency and the police. In total, they have raided 265 premises as part of an operation in England and Wales. And many of us will kind of see these types of shops littering our high streets, and they're sort of cash intensive businesses. And yeah, the barber shops, the vape shops, the nail bars, the American themed sweet shops, car washes. And these types of businesses can often be used by criminals to conceal the origins of illicit cash and laundering money. And what happens is crime gangs kind of use them to enter cash into the financial system, and they mix them with legitimate funds with criminal profits and therefore hinder subsequent law enforcement investigations. And they are known to buy such businesses using the proceeds of crimes, which then provides them a legitimate income and opportunities for further money laundering. So Rachel Herbert, who was the director of the National Economic Crime Centre at the NCA, said this operation, which was targeting all these high street businesses being used to sort of cover up all of this crime all across the country, it's really, really important to make sure that we're sort of cracking down on this fraudulent activity.
It's worth saying from a business point as well, if you are wanting to spend something which is a genuine business expense and you want to claim that against your tax liability, make sure you get a receipt. There's nothing wrong with paying cash, but if somebody offers you a discount for paying cash and then won't give you a receipt for it, there's probably something dodgy going on and you won't be able to get a tax deduction for it.
Yeah, 100% agreed. I think it's just people being aware, isn't it, that this kind of activity can happen and making sure that they're sort of covering themselves as well. Sticking with the theme of fraud, Heather, so the Insolvency Service has disqualified a total of and 36 directors over the last year. And in fact, 80% of those have been linked to COVID loan abuse. And as we know, this was something else that was in the Labour manifesto and something that the Labour government really wanted to crack down on in terms of kind of going after that fraud from the past. And they said that it would be investigated, and that's certainly what they're doing. On top of COVID loan abuse, the Insolvency Service issued 131 bankruptcy restriction orders, with 87 of those also being linked to COVID fraud. And as an example, a Sussex-based cafe owner was disqualified after fraudulently applying for 3 COVID loans, which amounted to a total of £150,000. And 2 of the companies that loans were applied for were actually dormant, but the loans were approved anyway. And the director also attempted to close one of the companies so it would not be liable to repay the loan. So as well as securing COVID bounce back loans, which they weren't entitled to, some of these disqualified directors have been banned for not paying the right amount of tax and VAT, and also failing to file their accounts. And as people might know, a disqualified director can't have anything to do with setting up a new company in the UK or abroad if it has ties to the UK. And they're certainly not allowed to promote a company, and also can't be involved at all in forming a new company, even if their name is not attached to it. So again, I think this shows that HMRC are really ploughing a lot of investment, time, resource into cracking down on fraud. And I think, a reminder to everyone that they should be operating appropriately and within the law.
And I think for legitimate businesses, it's basically good news that HMRC are cracking down on fraud, because after all, fraud just puts up the costs for everybody else. Turning to something different, we're all familiar with making tax digital for VAT. We've had that for a few years now. It's also coming in for the self-employed and landlords with effect from April next year. The monetary limits for that are fairly low. It's turnover above 50,000 next year, dropping then to 30,000 the following year and 20,000 in 2028. But it's pretty clear that for a lot of people, they haven't realised what this is going to mean for them. A survey was carried out by a business called Intuit, and that showed that something like 36% of people knew what they would have to do. There's a lot of lack of awareness, and I think it's going to be important for HMRC to really get out and bang the drum to make sure people know what they need to do. Of course, if you've got an accountant, you should be fine. I'm sure my colleagues who deal with the compliance aspects of self-assessment and landlords are fully on top of this, although it does mean we're probably going to have to do 4 filings a year instead of 1, so I'm afraid the fees might have to go up a bit.
Yeah, thank you for flagging that for us, Heather. Very important to be aware of those rules. But yes, moving on now to savers, actually, where unfortunately news is still, it still isn't great in this area. Again, something that we've talked about a little bit in the past is the frozen thresholds, and they continue to strike again. And it's reported that there'll be 1 million extra savers potentially having to pay tax due to the frozen personal saving allowance, which for those that aren't in the know is £500 and £1,000 respectively for basic rate and higher rate taxpayers. And actually, this rate or this level hasn't changed since it was introduced by George Osborne in March 2015. HMRC are doing their thing. They're sending out letters to remind people that they might be caught. But obviously, that doesn't, those brown letters don't always land on people's doorsteps. So I think it's definitely worth people kind of checking and being aware of whether or not they might be incurring tax on savings going forward. And if so, and they need to notify HMRC, then they should do so to avoid any penalties, particularly with the number of savers falling into this going forward. But Heather, I understand actually for some people, you might not need to file a tax return if everything is captured through pay as you earn, for example.
That's right. I actually looked into this for an elderly cousin of mine. She was widowed about 18 months ago. So I went and helped her to check whether she needed to do a tax return for last tax year, because I knew she had some money in savings. And I found that if your savings income is less than, I think the limit is 10,000, then HMRC can just code that out through your pay as you earn coding. Although that does mean if you get an amendment to your notice of coding, you need to check that as well, because I think something like 10% of notices of coding are wrong. So basic principle, yes, you're going to pay tax on your savings income. That hasn't changed. 2 things have changed. Well, several things have changed, but one is that, of course, tax used to be withheld at source from bank interest. It isn't anymore. What you get is the gross amount, and it's up to you to make sure that HMRC knows about it. So don't forget it on your tax return.
Yeah, and the other thing I think is worth mentioning thing is that obviously banks and building societies do share information with HMRC, so they will be well aware of what's out there and what people are receiving. So again, it's important to be aware of that so you know what to do kind of going forward.
Yeah, I actually remember one year when I filed my tax return, an error message flashed up saying, "You haven't declared any savings income. Are you sure that's right?" To which the answer was, "Yep, I've got an offset mortgage. So all of my income is offset against my mortgage and is reducing my mortgage payments. Go away."
Good for you, Heather. some good planning there.
So turning to something more fundamental about income tax rates, there was an interesting article in the Times by Paul Johnson, the current head of the Institute for Fiscal Studies. And Paul writes quite trenchantly about tax policy. I think he gets very frustrated that a lot of the things that sensible tax commentators like the IFS say still seem to get ignored by government. And he pointed out it's actually 50 years since any chancellor increased the basic rate of income tax. Dennis Healey in 1975. And he, I think, reduced the rate from 33% to 30% at that time. In fact, when I started work, because I am very old, the basic rate of tax was 30% then, so 20% still seems pretty good to me. But it's interesting, it's much, much easier for politicians to reduce taxes than it is to put them up. But I do think that sooner or later, if Rachel Reeves is determined to stick to her fiscal rules of not borrowing more than she's set out she's going to do, and if the economic situation continues to be not great, particularly with what Trump is doing in America, then she may be forced to raise taxes, and actually raising income tax is one of the fairest ways to make sure that everybody pays a proportionate amount, because obviously those on lower incomes pay less than those on higher incomes. However, I'm not holding my breath on that one. I'm sure we'll be looking ahead to the autumn budget over the weeks and months to come, but I'd be very surprised if we did get a rise in the rate of income tax. One other thing to remember on that, although we all know that the basic rate is 20%, anybody who's repaying a student loan, their rate of tax is quite often 29%. And student loans came in about 12 or 13 years ago now, because my son happens to be 31 and I know he's got a student loan. So there's quite an increasing proportion of people for whom their rate of tax is not 20%, it's 29%.
Yeah, I mean, it's a really good point, Heather, but also going back to the sort of Labour manifesto and not raising taxes on working people and et cetera, I think you might be right that it will be her last resort. It'll be Rachel Reeves's last resort if she has to do something here, and it's certainly not something that she is going to kind of do with open arms. I don't think. We will have to wait and see what happens.
A few other bits of news about politicians this week.
There have been indeed. Jeremy Hunt, who is the former Chancellor, has been made a knight by Rishi Sunak in his resignation honours list. Mr. Hunt became an MP in 2005 and was appointed a Chancellor in October 2022 after the infamous Liz Truss and Kwasi Kwarteng government. I guess his biggest kind of leaving gift to everyone was the fact that he did actually reduce national insurance contributions by a total of 4% in the 4 months from January to April 2024. And he also reduced some of the NI on self-employed. And actually, it was estimated that these cuts cost the Exchequer an estimated 18 billion. So perhaps that is where Rachel Reeves' black hole has come from, but certainly was probably a popular move at the time. I guess congratulations to Mr. Jeremy Hunt. And remaining with politicians, for those that might be interested, Downing Street has published a summary of Keir Starmer, Rachel Reeves and Angela Rayner's tax returns, details of their salaries and additional income. And I think an interesting point, given a lot of press, certainly when they originally came into government, was around these sort of gifts, etc., that they were receiving. And actually, Keir Starmer's tax return reports some benefits which have been declared. And whilst there's no detail on what those benefits are, it seems to be that he could be being prudent in reporting some of that and taxing it. Whether or not it should be taxed is another question. But there we go, clearly being prudent and paying what he thinks he owes. So that is good news, perhaps, from our Prime Minister.
The Tax Factor from Blick Rothenberg.
Well, once again, we've run out of time, so that's it for this week's episode of The Tax Factor. If you'd like more insight into the latest developments in UK tax, from expert analysis to practical guidance, head over to the Blick Rothenberg website. You'll find a wide range of videos, articles, and of course, more episodes of this podcast and our sister podcast, Brave Business.
Heather, I understand you're doing a double shift and are back next week as well.
Yes, although given it's a long weekend, next week's podcast might be quite short, but given current politics at home and abroad, nothing is assured. I'm also delighted to welcome a new voice to the podcast, Sarah Stenton. So whilst we can't guarantee we'll be hopping out of a space taxi in a blue boiler suit, the run of women in charge of the podcast continues.
I look forward to listening. So whatever you're doing this long weekend, please do have a great time, and goodbye.
And for me, it's goodbye until next week.
That's the Tax Factor. If you enjoyed the Tax Factor, please like, share and subscribe. Join us again next time on the UK's top tax podcast, The Tax Factor. The Tax Factor is a Blick Rothenberg production. Copyright 2025.